This is Charleston's retirement coach, Brandon Bowen.
Thanks for subscribing. Thanks for downloading. Most importantly, thanks for listening. This is Charleston's Retirement Coach Podcast with Brandon Bowen. It's all powered by Bowen Wealth. You can get more when you visit bowenwealth.com, and you can find that and all the information in the show notes. My name is Mark Owens. Now, let's get to the show. Brandon, the market has been pretty volatile over the past couple of weeks, Paul.
Yeah.
Would you agree?
I would. And like you just said, keep that number right by your doctor's number. You know, you need a financial doctor here, a financial coach.
That.
You need to keep that number nearby because, yes, the markets, they've been not for the faint of heart. You know, the seatbelt need to, keep your seatbelt buckled here.
Right. Every
going
day
through some turbulence.
New.
Yes.
You start the day and the market is one way. And then you end the day and it's complete opposite.
Oh my gosh. Yes. And you feel like, okay, good. You know, it's been a good week. Maybe we were at the bottom here and, and things and then boom, down.
Yep.
A fresh week and fresh sell-off.
Yep. Yeah. So a lot of people, and I know you talk to a lot of the families you serve, they feel like they should be doing something, but not really sure what. So I want you to hear this clip from Carrie Hannon of Yahoo Finance, who has a few steps to follow.
Number one, I tell people, sit on your hands a little bit. Wait before you make any big emotional moves, okay? Number two, it's important to stay in equities, no matter how close you are to retirement. This is where your growth is going to continue to come from. That said, the older you are and the closer you are to retirement, you need to shift a bit into, some cash equivalents or some great fixed income opportunities. We're just at the beginning of what I would anticipate to be a few years of volatility. And so periodically you should be rebalancing anyway, but this might be a good time to have that conversation.
A few years of volatility. Do you agree?
Yeah.
That too.
I know. Did you hear that?
Yep.
I would say I would add, some of those steps she had mentioned there is that I would add, say, get a second opinion, just like on your health. And I would say this is imperative, especially for you listening who are kind of DIY, do-it-yourselfers, or maybe you've been, or just your money's been at the 401k, at your work. And maybe you have yet to retire. Maybe you're 60. You've got retirement kind of a few exits down the road. You're thinking, and you're just doing what you're supposed to do. Money's in the 401k, or you've already retired and it's still in the 401k, right? So you're kind of managing it yourself. So I'm talking to you, get that second opinion. Also, if maybe you have an advisor, but you would say these conversations have not taken place, you still feel like you're still in some of these stale, just overall growth strategy that you've had for the past 10 to 20 years. You feel like maybe you're still in some of that stuff. It's just the same old holdings that you've seen for years now. And you haven't had this conversation, this retirement-ready conversation that she was just talking about. So if you know that I'm talking to you right now, let me give you my number real quick, 843-890-2400. 843-890-2400. Go ahead and give us a call, get to the front of the line, a text real quick. But yes, I agree with what Miss Hannon what she said there. With the first point is like, don't make an emotional decision. She said, sit on your hands. Believe it or not, I think that's good. I think that's, let's take a pause, right? Anytime these big emotional decisions, right? With your spouse, with your kids, whatever, a lot of times that initial reaction might not be the best, right?
I tell my daughter sometimes, all right, take a deep breath, count to 10.
Yep.
Before you say that next line.
Yes. Sending that text back. You know what you want to say.
Write that email, but save it in your draft.
Give
it about 5 hours.
You're playing. I feel like you're playing with fire unless you go to like your notes section on your phone and type out your text there, like because if you do it inside the text, you might hit. You fat finger that. Yes. Or in your email. So do it in a Word document. So a lot of times that initial reaction. So I would say, breathe for a minute, right? Don't make that emotional decision, because when you see a week here where you've lost, $25,000 or $50,000, depending on your portfolio size like that, that's awful, right? You're like, oh my gosh. And you feel like there's no bottom. The floor is we're on the verge of an avalanche, like you see on TikTok or social media, and just boom, just the ground just gives way and everything, right? That's what we feel like is going to happen. So first I would say pause. Okay. Then she added, she goes, you got to have some cash like or fixed income. Start adding that to your portfolio, as you approach retirement. That's what you've got to be doing. So if you're doing it yourself or your advisor, he or she is not doing this for you, they're doing a disservice, right? So these changes, now you do need to act. Okay, once you've realized these things and you realize what might be missing here and the potential or the reasons why we need to do this, it's because we're going into retirement, or either we're in retirement and we're going to need to start pulling money out of that portfolio. So now you must act. And I would say this is, Mark, I would say this is the biggest and most common mistake that I see all the time, week in and week out, and that is having your portfolio too aggressive as you enter retirement. So recently I had some clients that came in, new clients from Goose Creek up there, and they just said, Brandon, we are seeing way too much volatility with our portfolio. We've got 1.5 million. We've saved. We worked as hard as we could. We've tried to stay disciplined here. You know, of course, over the years, we've done some vacations and things. So, you know, we've tried to save, but we've also tried to live our life. Our kids are gone. They're doing better than we ever did. And they're great. We want to enjoy our retirement here. But we just see this money and they told me about back in 2022. 2022, they said, you know, this thing, our portfolio went down $300,000. That was 20%. Right? It went down $300,000, and they were like, they just could not control their emotions. They were talking to their advisor, and they didn't see any defensive holdings, anything to try to fight. It's like they were just getting beat up, right? You know, they had stocks and bonds, but if you remember, stocks and bonds both went down in 2022. So there's no like fixed income or income producing income strategies in that portfolio. And so their emotions got the best of them back then, right? And they went defensive at like the worst time. They went to cash. And the problem is they missed most of the recovery. Because now with hindsight here, we can see that, then in 23, the markets just started coming back, and then 24 was great. Well, it's really hard in the moment, right? It's like right now we feel this sell off here, this crash, you know, so far this year here in 2025. A lot of times we feel like, this thing, it could just go, right? Look at where the markets are at and these tariffs and all this uncertainty and volatility, and your emotions might get the best of you at this point. So what I'm here to say is just like what she was saying, our audio is that we've got to have proper asset allocation in your portfolio. There's been so many studies done. A lot of people think, you listening, you might think that the number one factor determining your success in retirement here or with your portfolio is in timing the market, okay? Getting in, getting out, all this stuff, market timing. Well, we know that is almost impossible to do properly, you know, over and over. You might get lucky one time, but it is super, super hard, right? But a lot of people feel like that's the secret. Well, let's just get out here and then we'll just get back in, you know, when the thing's done. But it's so hard, right? Over 92% of your likelihood of success comes from proper asset allocation. Okay. And so that is, of course, what percentage do you have in fixed income? What percentage do you have in maybe moderate risk, moderate volatility, maybe balanced ETFs, things like that, low cost ETFs? What percentage do you have in high risk stocks? Like she just said, you know, she's like, you keep some stocks in there because that's where we get a lot of our growth from, right? We've got to have some of that, but it's got to be the proper allocation now at this point. So that's what you've got to keep in mind here. You've got to keep in mind your asset allocation. That is the number one determining factor to your success.
That number is 843-890-2400. Again, 843-890-2400. We invite you to call the team right now to continue this conversation. And, you know, more than asset allocation, Carrie Hannon mentioned it a couple of minutes ago. I heard you say it earlier. It's all about the emotions as well. We get very emotional about our money, which is understandable, Brandon. Mm-hmm. How do you take the emotions out of retirement planning?
Gosh, with the proper plan, because I have a saying, I say discipline leads to freedom. And I think that applies with your emotions, right? If we're disciplined, if we know that, okay, for these next, 1 to 3 years, we're going to be accessing this bucket of money right here. And this bucket of money can't go down due to market corrections, okay? Market volatility. This money is protected, right? It's maybe out of the storm there. So when we have this volatility, you know that, hey, I'm good for the next 3 to 5 years. Yes, I've got some money that's in that storm, but in 3 to 5 years, I believe that the market's going to do what it does. It's probably going to go down. Maybe it's going to recover by then, right? So that helps you control your emotions. It helps you control those emotions because you've got a time horizon set with each dollar of your money so you don't freak out when you see that volatility mark.
What are the key words when I call this weekend to really set up to continue this conversation?
For this one, let's text the word game plan because I feel like, okay, if you're heading to retirement here and you don't have the right asset allocation, then I want to do a full plan for you. I want to take a look at everything that you've done, different accounts. Maybe you still have money in the 401k. Maybe you've rolled it out to an IRA. Maybe you guys have some brokerage accounts, joint accounts, or a trust account, maybe some Roth IRA money. I say, that's great. Bring it all in. I love it when it's all over the place here, because that tells me that you care about your money. You've been trying to do some things. Maybe you need some consolidation to get some nice synergy here. So bring it all in. We'll kind of clear the table, and then I'll start building it back, building back an income plan that you can have that confidence in. So this is what we call our full-blown retirement game plan. Pick up your phone. I know it's right beside you. I've got Tanya standing by, awaiting your call or text, and our number is 843-890-2400. 843-890-2400. Text the word game plan. She'll text you right back. Hey, can you talk right now? Do you want to talk on Monday? Whatever, right? It's all up to you guys. So reach out to us. Let's get this plan in place. I know you've been thinking about your taxes. You've been getting things done. Let's just continue this thought here so you can just know that everything's been done for your retirement.
It's a Build Back Better plan that actually works. 843-890-2400. You can call. You can text the team at Bowen Wealth right now. Again, 843-890-2400. All right, Brandon, as we continue this conversation about the market. Now, watching our retirement accounts lose money in a market, it's never fun. But I want you to hear this clip from strategist Ken Polcari. He tells Fox Business that down markets, they actually come with opportunity.
This pullback is actually very healthy. It's long overdue. It feels certainly uncomfortable, but in times like this is when, as a long-term investor, you really need to kind of really take out your shopping list. This is very active individual stock management, right? You want to pick up names that are on sale, really good names, top of the line, the largest mega cap names in the industries that you want that are really on sale, because this too shall pass. But I do think there's going to be a little bit more churn lower.
Got a little Lord of the Rings right there. This shall pass.
Yes, yes.
Let's talk about that for those getting ready for retirement. Maybe they don't have that long-term horizon. What are the strategies, Brandon, to balance those two factors?
I'm trying to think of a good analogy. So have you, Mark, have you ever gotten frustrated because maybe you didn't know where something was, maybe in your garage
all the time,
or like, a closet or something, right?
Yeah.
You're like, where?
Yeah. Where did I put that drill bit?
Yes. You don't know where. You're like, I thought I put it here, and you start accusing everybody else that who. So I've done the same kind of stuff, and I know you have listening, right? So it's like that long overdue cleaning that that you finally you break down. Yeah, you break down. And you say, okay, you finally clean this thing out. What I like to do is just pull everything out of maybe that section of the garage or the closet, pull it all out. And then you start going through it and start putting back only the stuff that you want or need. And what we find is that we actually don't need a lot of that stuff in there. It's kind of a stretch here, but I would say that is the same thing with your portfolio. What we do here, because he was talking about being retirement ready and those time horizons, a lot of times we've got stuff in our portfolio that we don't need anymore. Right? We don't need oftentimes. And I know, once you put stuff back into your closet or clean up that garage, there's so much more space.
Yeah.
Right. You're like, wow, man, I've got such a big garage now and such a big closet. And I feel like because you get more out of less, right? You start getting that
is key.
Yes, you start, consolidating, you get rid of the junk. And I know the same is true with your portfolio. We get more from less once you have the right allocations in there and the right selections, the right stocks, the right fixed income, things like that. Your portfolio is much more capable than you'd think it is. So if you know that I'm talking to you right now and you know that your portfolio needs to have a second look, a second opinion on there, let me give you my number real quick. Give us a call or a text, 843-890-2400, 843-890-2400, and we'll get started on your portfolio review right now. So back to that audio, he said you need to kind of go shop around, right? Start looking at specific stocks. So that made me think of, oftentimes here with my family, my girls here, I'm like, hey, they'll want me to go to the store and, and buy certain things. And Mark, I don't know about you, but I go into a grocery store and I'm just like, when it's supposed to be some specific item and I don't know where it is. Yeah. I just go ask somebody. Yeah. Like really quick. I got this list and I'm just like, oh my gosh, I could be going up and down these aisles. So I just go to somebody. So I really like Instacart these days, right? You can just you can search it on your phone. You can build your shopping list, whatever. And then a shopper goes and does that. Okay. Goes and gets everything for you, brings it out to you or even bring to the house, whatever. So think of me as your your shopping assistant, because we're going to start going up and down the aisles, and based on what you need, maybe, but like what you're preparing for tonight or whatever, right? Based on what you need, I can help you take a look at, okay, yes, you need that. No, you don't need this. Think of, and even we can get super specific, right? With mild, medium, and hot spice, okay. Temperatures, with the stock market, with your investments, there are things that can be, really hot, very, very volatile. There's certain ETFs, there's certain stocks that are going to have major swings. We could be in small cap companies, tech companies, things like that are going to have, with the wrong headline or the wrong quarterly earnings call, that stuff could drop 10 to 20% in one day. NVIDIA did it, right? So there's things that are high octane. There's also things that are going to be much more easier on the palate. And so what we do with our clients is when we build their plan and when we start looking at their portfolio, I want you to start thinking about 3 different buckets or porridge temperatures. And so when we start looking at these buckets, we have the first one is going to be our near term. If you put a label on it, you could say, this is your now or near term money. And so, of course, in this bucket, if you were to look inside this bowl, it's going to be investments that are built for income. Okay, fixed income, very low volatility, low risk, maybe even no risk. Okay, because this is money, we're going to put it in there and then turn around and kind of open the valve and have it start paying right back to us. Okay, so this is our fixed income, our near-term money. So you don't have to freak out when the markets drop, because this money that's paying you right now is not in that storm. Okay. Then our next bucket or next bowl is going to be our midterm, midterm time horizon. So that might be money that we're going to start tapping and reaching our hand into there in about maybe 3 to 5 years from now. 3 to 5 years from now. And so what we might, if we were to look over and look down inside that bucket, that's going to be some low cost, broad, balanced ETFs. And so those are going to be where we're nice and broad, small cap, mid cap, large cap, international, fixed income, maybe bonds, corporate bonds, things like that. So it's going to be stuff that's very broad, kind of have some growth potential, but also some defensive solutions in there, very balanced. Okay. Then our third bucket, if we were to walk past that one and look down into there, that's going to be the performance bucket, right? That's our long-term bucket. And that's where we might find our individual growth stocks or growth ETFs. I've often called this the sexy investments. Okay.
Right.
This is where we're trying to, this is what you're going to brag to your buddies when you're playing golf. They're like, yeah, I made, because the stuff in this bucket here is going to, that's going to swing wildly. Right. But that, over time, if we look back at the history of the stock market, we know that, yes, there's volatility, but we got to have some money that stays in the game. So that's your long-term money. And that might have some Roth IRA dollars, some after-taxed Roth IRA, because your growth is completely tax-free. So those are beautiful. So I like having those performance positions out in that bucket where we might grab some out of there for a great Europe vacation, okay, or a cruise, or something like that. We'll just be very timely on when we want to go grab maybe some money out of there. But a lot of that, you might not ever touch it again in that third bucket. That might be a part of your legacy, what you're doing for your grandkids or your kids, or, what you're going to be passing on if that's something important to you. So we got to have some money over there that stays in the game, that's going to grow. And so all of this is what I call purpose determines placement.
Oh, okay? I like that.
Yeah. Purpose determines placement. So, if you think about your portfolio, if you turn around and look at it and you're like, wah, wah, because you think about how I just described a portfolio with a purpose, 3 different buckets, 3 different strategies. We consider your tax status of each one of those dollars, right? If you don't have that, you need it. You deserve it. Right? You deserve this financial independence, and it comes with a proper retirement plan. And that's what we do for, people when they pick up their phone and call our office. We get to work building this plan for you. And you turn around and look at what you currently have. And that's why, Mark, I see that I would say 80 to 90% of the people that reach out and come in and sit down and go through this planning process, they become a client. Because they realize what they don't have. They realize, hey, with this plan in place, we can better relax. We can better achieve our retirement goals of travel, of spending with confidence, of blessing our kids and grandkids, of giving to our church or a charity, or, whatever these things that you've really been wanting to do and you haven't felt the confidence to do it yet, it's because you don't have a proper plan in place. So pick up your phone. Let's get started. Maybe this is going to be a great fit for you, maybe not, but you deserve a second opinion. Our number's 843-890-2400. Again, 843-890-2400. You can call or text, and I would say text portfolio review. That's what you need, because you need someone to take a look at that portfolio. Maybe it's been too volatile and you want a personalized shopper to go back. Hey, let's go walk down Wall Street. Let's go look at what investments are available. And I'm going to tell you, nope, pass on that one. I'm going to say, yep, let's get a double of this one here. We need some of this. I'm going to lead you down, investment row. And we can custom build your portfolio based on your timelines and your goals.
Is it fair to say you'll be our personal Instacart for retirement?
There you go. Yes. You got to tip me. You got to leave me a tip. You can't be else, all greedy and leaving no tip, Mark.
And dude, give me 5 stars while you're at it, too.
Yes.
Thanks for listening to Charleston's Retirement Coach Podcast with Brandon Bowen. To learn more, visit bowenwealth.com and join Brandon for his radio show, Charleston's Retirement Coach, Saturdays at 11 a.m. on 94.3 WSC.
Financial professionals are not licensed in all 50 states. To find out if J. Brandon Bowen is licensed in your state, please call 843-203-2030. J. Brandon Bowen is an investment advisor representative of Bowen Wealth, LLC, a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. J. Brandon Bowen is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Bowen Wealth, LLC, insurance licensed in South Carolina. Market Guard is a registered investment advisor with the SEC and provides model portfolios only to Impact Partnership Wealth. Market Guard makes no implied warranties or representations and is not liable for any data presented.